Okay, we're live. This is September already, the 43rd edition of the Real Estate Brothers, where we're kind of talking to you Hawaii folks out there about some August statistics. Dean's going to talk about some scams and some new construction. And if you guys want to check out past editions of this, go to raaloha.com. Check those out. And welcome to the show.
In Hawaii, there's so much to do. There's hula, there's surfing,
Glad,
and real estate too. We just two local guys with so much to say. So listen to the Real Estate Braddahs today.
And as always, if you guys have any questions, please type it into the comment section. We will try to answer it as we move along. To kick things off, the free freebie this month, we are doing a banking cram school. So if you guys haven't heard of this infinite banking policy, well, we're going to be busting it open for a couple hours in the wee morning if you're in Hawaii, September 4th. Also, check out the info page at simplepassivecashflow.com/banking to get registered for that, and the e-course through there. It's free. What do you have to lose? But take us away, Dean. What's going on in Hawaii lately?
Hey, Lane, thanks again for always having me as a co-host. Episode 43, so exciting, right? Always, man, we're 3/4 through the year just about now, right? It's getting kind of crazy, right? I don't know. That Delta variant is kind of getting kind of out of hand. That's if that's the word, you know. But anyway, I
Yeah.
think by now, hopefully, everyone knows who we are. I'm a former CPA and real estate investor and realtor over in Hawaii, and I have a YouTube channel and a website, so check us out. Oh yeah, thanks, man. Appreciate that. That's a cool thing. So jumping in. So the statistics for August didn't come out with from the Honolulu Board of Realtors. It doesn't come out till the 6th of the following month. So I was able to pull some information though, as we always do, get a little insight in it. So for August 2021, I believe we're going to break $1 million as from Austin Powers. I'll take that. But it seems like we're going to be breaking the $1 million point for the median price of single family homes in Honolulu. The previous record was just the month before at 992,500. Yeah. So, and previous year August was 815,000, and not to be topped off by single family condos and townhouses are also going to be hitting that 500,000 mark and also setting a new record. Don't let my son see that. He's gonna use cussing. But
Hopefully he buys some rental properties like that
right.
and follows in those footsteps.
And
Something I was thinking about today, everybody says, I'm not a huge fan of the investing in Hawaii, but then, the people that are moving in have money and the people that leave don't. Like I kind of feel like Pearl City, Mililani are kind of in the middle of the social economic in Hawaii, right?
Yeah.
And if you guys are political out there and you guys get easily offended, please don't listen anymore.
But you shouldn't be listening to Lane at all if you get easily offended.
Yeah. So, but hear me out. Most in the mainland, right? If you were to take the middle of the rung Mililani type of places, Pearl City type of places, eventually the neighborhoods get worse, right? Because the old homes get older. The social economics, this is how money works, right? The areas typically get more older. I guess what's the opposite of gentrification? But it gets rougher, right?
Yeah. I think I know where you're going from the standpoint of the generation afterwards wasn't the one that saved up to buy the house.
Right. Well, just take California, right? Back a long time ago, right? The immigrants, Japanese Americans, they live in places like Torrance, Southern California, but where do they all move up to, right? The affluent areas, the Bay Area, right? And then they get their homes get infilled by other, more immigrants. Now, I don't think you have that same phenomenon in Hawaii. I think it's very different. Those middle of the rung areas get taken up by other maybe more affluent locals today. So I think that there's kind of a lower cascading down effect where new people come in, have a lot of money, and the people that get displaced move back to the mainland.
Yeah.
So with this, I mean, I'm thinking, I guess I kind of just making its argument that if you were to believe this, you'd be bullish to buy Hawaii real estate, right?
Yeah, I agree to that to a certain extent. I have that question always come up to me, and like you said, like I don't know how many friends have you heard say, "Oh yeah, we're moving to Vegas or to Washington State because the cost of living is cheaper or whatnot," right? So and then like you said, you hear those stories or the articles about people from California moving to Hawaii because they can work remotely and they can try to avoid the pandemic as much as possible. So yeah, I think there's merit to your point.
Yeah. If you
So
guys have
anyway,
comments, put it into the comment box. Drop a comment or question below. We live stream this on YouTube, and also we have the podcast too. If you guys want to catch us up while you're doing chores,
and then watch it on 2.0 speed and hear us talk quicker.
Yeah.
But anyway, so if you Lane, if you can back up to one slide, I wanted to touch a little bit on the condo townhouse. So it broke a new record. The previous record was in July, a month ago. So 500,000 right for August 2021. Previous record 475 for July. But the my point was that the previous record before this was 2019. Prior to this July 2021, the prior record was 2019, I believe. And so what's happening is that condos and townhouses, I feel like, are kind of slowly catching up. I think in the past few episodes we talked about like even like a potential strategy because of the fact that single families were so hot here and all over the country that I was saying, well, maybe if somebody wanted to downsize to a condo and, they could tap into the fact that it's not as hot and tap into their equity in a single family home, sell that off by a condo and then wait out this storm. And that may not hold true now that we're breaking again new records for the townhouses. But in the next slide, I'll show you that so this is a month supply of inventory, and we were saying that the single families month supply of inventory is always really low ever since 2019 compared to condos, especially after 2 years ago when they passed the short-term rental laws, or that they were going to enforce those illegal short-term rental laws more. That bumped up, as well as the pandemic that made people flock, further to the suburbs. I think we talked about the donut effect. And now it feels like things are starting to balance out now, where the condos and townhouses are now getting picked up. Inventory is now dropping. So you can see my red arrow where that disparity between the month supply for the townhouses and the condos and the single families are it's getting slimmer. Yeah. So basically townhouses starting to kind of catch up in terms of being a strong seller's market because of the lack of inventory, right? So this is Lao, this is Oahu basically. And but you know what, when we talk about the strong sellers market, that seems to be not only in Hawaii, it seems to be something that is nationwide. But again, real estate is local, so when I'm talking, we're adjusting that. Yeah. So I know you guys are tired of hearing me talk about the hot real estate market. There's two emails that I got and two scams of the week that I always like to bring up, and this is universal, right? That everyone can utilize wherever you're living. But two scams that I wanted people to look out for. This first one is where they're making the email comes in that you're having like a copyright infringement issue. So either Instagram photo or YouTube videos are violating copyright laws. So the email says to click on a link to protect their account from getting suspended. Most recently, actually, they're having you get on a phone call with a support tech, and then that's when they get you on the phone. They try to get personal information from you. So always keep a lookout. I mean, this one is a little bit more off the wall, but people who post on social media a lot may get scared or paranoid into like, oh, am I what am I doing wrong? Did I post that most recent song that I like, and am I breaking some kind of copyright infringement law, and am I gonna get sued? Yada yada yada. So I mean, always keep that in mind. I think the my second scam I wanted to bring up on the next slide is a little bit hits more people, and that's talking about COVID-19 fish baits now. So these emails are claiming that your government is requiring all employees to complete a form, and failing to complete the form could carry significant fines for you, right? So if you click on the email, you're directed to a fake login page on Microsoft Outlook, and then when you try to log in, they ask you to verify your private information like name, birth, and mailing address. So I don't know, just be careful out there. There's so many things going on there, and I like to bring them up, and hopefully our listeners are a lot more savvy and we can trick the frauders. But I don't know, it's always good to be aware of them. And so some tips I'd like to point out is watch out whenever there's a sense of urgency in the email. They're asking you, oh, you need to reply right away or there's gonna be a fine. They're trying to take advantage of you and your potential impulsive actions. So always take a step back before you take the next step. Yeah, never click on links or download attachments in emails from people you don't know. And also, if you receive unexpected emails, check with that person that to make sure that it's legitimate. I've had emails before where it looked like it came from my either my brokerage or my financial advisor or my CPA. I would then call them, yeah, or maybe the company of something. That I'll call. I would actually reach out and say, "Is this from you guys?" And sometimes they're like, "Oh, let me check into that." And it's like, "No, that's not." And or sometimes they're like, "Oh yeah, this one's legit." So it's always good to take a step back because they're everyone's trying to make a quick buck. But anyway, so we're talking about the hot real estate markets, right? And so everything on those slides, those are resale, yeah. So we haven't visited the new construction recently or new developments for new homes. So I wanted to reach back out and talk about two of them. One of them is Nanea at Koa Ridge. That's by Castle and Cook. So they're actually on the last two phases of the Nanea single family homes. And there's a lot more to come though. I mean, they're doing over 3,000 doors over a 10-year period. But now they're gonna, after they built the first 9 phases, now they're gonna focus on the multiplexes as well as the affordable homes that they were mandated to build, and as well as the commercial and retail areas that they're trying to build. A really nice neighborhood. Like how they did with Milani Malka and Milani Town. So they're in the last 2 phases of the Nanea single family homes, which are going to be approximately, believe it's 20 that are going to go to lottery. There are 19 that are going to be on reserve for like friends and family, but they could be released to the lottery. We never know. So next slide, Lane, please, is the so that what I want to bring up too is your statistical chances. We talked about this before too, versus resale. Resale for single family has been so hot. You might be 6, you could be 12 competing offers in some issues. So in the last phase, there were 83 applicants, which is a lot less than when the first 2 or 3 phases came in. I think when the first 2, 3 phases came in, there were like 150 applicants and then 160. And typically, so if one phase would have maybe 15 homes to offer, but half of those would be reserved for what's the friends and family. The developer gets to reserve about half to allow for their employees or vendors. Um, so what happens is only they might say we have 15 houses built, but only 8 are going to go to market. So the good news is last phase there were only 83 applicants, which is a lot less, and a few of the earmarked homes actually went back into the public lottery, right? And also the last few phases were these perimeter lots, so very very prized because there's no one in your backyard. So those were in the 1.3 million was the higher range of those. But as you'll see in the next slide, for these last two phases, phase 7 and phase 8, there's 20 for lottery and 19 for reserve. But again, the reserve, if they're not taken, they'll be put into the lottery. And these price points are a little bit lower because they're actually more they're one block in from those perimeter lots. So they're going to be at the 975 to 1.06 million. Again, 3 to 5 bedrooms, 1,300 to 2,200 square living about. And actually, there's actually model homes available. They just became available in the last month or two. Prior to that, everyone in this last year was buying off of the blueprints. So, if you guys want to go check any of them out, if this sounds like in your price range, you're tired of losing out, give me a holler because I can set up an appointment for you, and we can start seeing to get in our your application for the lottery. It's actually pretty simple to apply for the lottery. It's coming up next week, so let me know. Another great construction.
This reminds me of is like
Oh,
I'm trying to buy a new car.
I was gonna bring that up. Yeah.
And I guess like I won't reveal what that car is, but like it has a very
What?
big following. But it's actually more expensive to buy it used because it's in high demand, right? So like
Okay.
the strategy we're gonna do with my car consultant is that like you're gonna buy it new from the mainland, ship it over. So it's kind of the same thing. And he's trying to get away from the competition.
Is it so it's not a European car?
No.
It's not one that you can buy and then drive around on the Autobahn and then save on taxes when you bring it back.
No, you'll see it.
I want to hear.
I have a hint later on.
Okay. I'm waiting with bated breath. But no, it's a funny point because I was actually thinking of bringing up that parallel where it's kind of like buying a vehicle from Toyota or Servco, where there's all of these packages, or they offer these various I guess options. But what happens is at the end of the day, these options are already kind of preset for the most part, and they're already being built, right? So it's kind of like in the lottery, you're gonna get it, and you may or not be able to add on that loft on the top, that extra 500 square feet, or the flooring and things like that, yes, but those adding on that fifth room or that sixth room, sometimes it's already determined. So it's kind of like when I go shopping at Servco for my at Toyota for my say my 4Runner, and it's like there's all these options, but there's only a few options that have there's a few packages, I should say, that have all these options. So you only can choose amongst the handful of packages, and whatever comes in that package, you get those set of options. So
the same thing.
Yeah.
Like
Yeah.
that's why I'm getting it like cheaper at the sticker price, because it's like this really messed up color that I don't know who the heck likes, but I'm gonna buy it. But then I'm gonna wrap it. So
are you serious? You're gonna wrap it?
Yeah.
Dude, I was contemplating on that. I actually just bought
But
a new vehicle.
it's all the kids are doing these days. That's what you gotta do, man.
I mean, like you're gonna put like your face in simple passive cash flow?
No, it won't be that awful.
For to change the ugly color.
Yeah.
I can't wait to see it. When will we hear more? I'm
I don't know when it gets built later on this month, supposedly.
Oh, is that another hint right there?
Yeah, but I
Oh.
don't know. It's like when you're talking about like the fierce competition, I was like watching TV and like we saw this commercial.
Yeah.
Oh, she give like the stink eye to the other couple that comes by. You know, look at that. Oh, I don't know. That one guy would probably kick their butt, right? But oh, it's competitive out there. You know?
Oh no! When I'm taking buyers, that's legit, man.
Yeah. But
Because you're
look
eyeing out
at,
they're eyeing yeah.
but everybody looks pretty dressed. Look at that. Oh, you know
Yep,
what I feel bad for? This sucker right here.
those are only actors. Keep in mind,
Yeah, only actors. Yeah, non-union. I know.
could be SAG. They could be SAG. We don't know. But so another new development I want to bring up was one actually in town in Kaka'ako. It's called Ililani. So this is a kind of interesting development. It's not like brand spanking new. It's actually like a mixture. Like half is affordable, the other half is market priced. So a 42-story condo over in off of Kiave Street, actually close to like H Mart and Salt, and it's gonna be kitty corner to one of the rail stops. So that's kind of like a could be a deal breaker for some. But the interesting thing about this one is again new construction, but the fact that there's half um, I guess affordable living and the other half is market kind of it's kind of interesting too because it to me that affects the market units, right? In terms of just the demographics living there, and I guess people maybe potentially viewing the future appreciation, possibly all of these little factors could play in. But anyway, this is 2 bedrooms and 1 bedrooms units. The 1 bedroom units are for the affordables, which are all taken already. Um, there's about 40 something odd units, maybe a few less of the market units available. So those are the 2 bedroom, 2 baths. Um, they range. So what's left in terms of inventory? They're from 720 to $880,000. High sevens to 826 in terms of square foot of living. And I just heard that they got the okay to start construction. They had to get some kind of sign off from the buyers or the insurer or something. So they're gonna break construction, um, real construction. I think they had announced some kind of breaking grounds in 2019, but I think now they're actually gonna start building. So the expected completion time frame is Q1, more likely Q2 of 2023. So they have a sales office too. And if anyone is interested in, again, tired of these multiple offer situations and they want to try take a look at these types of options for new construction, just let me know. This one is not a lottery system, by the way. The prices are set, so their remaining inventory they have, the prices are all set, and it's just for the remaining for Ililani, it's first come first serve. So yeah, a lot of options for people. You just got to find out what works. It might not work for everyone, but you never know. Yeah. So that's what I had for me.
Her into the show. So if you guys haven't met me before, my name is Lane Kawoka. I got a bunch of engineering degrees, but like Dean, no longer do that as we are full-time real estate investors. And Dean does a little real estate brokering on the side. Um, let's see here. Oh, there's the hint, Dean. You see it right there.
Oh, where?
That's the hint. If you haven't yet, Dean's gonna go look at in the file. He's gonna look at the file for that slide.
Yeah.
Won't hear from him for a little while. But if you guys like investing on the mainland for cash flow, check out my podcast, Go Passive Cash Flow, Passive Real Estate Investing. We focus on helping folks who are higher paid professionals invest for cash flow. So here's what we're going to be going over. A little bit of a teaching point here. People talk a lot about cap rates. What's all that involved with? So low cap rates are in areas that are very secure and stable. Unfortunately, with those types of places, such as Hawaii, you have lower returns there. The higher returns is usually correlated with like a less stable market. So we don't all these are major markets. So we don't have on here some of the medium size and smaller markets. So those will probably be in the 4, 5, 6% range of cap rates. And this is just putting different markets on here takes no into account into different asset classes like apartments, mobile home park, self-storage. It doesn't take into account different submarkets. So you have better areas, you have worse areas in a major MSA. Here's a little bit of a teaching point here. Uh, Dunning-Kruger effect is the phenomenon where people come in, they start to tell them all this stuff, and go to the first stage where they don't know what they don't know. Then they move towards a point where they thought they finally know that they don't know everything. And then at that point, they start to hit that inflection point where they start to make sense of it, start to build the relationships, build a community within simple passive cash flow, and then move off and get to mastery at some point. Well, you never really get there, get close. So you had a scam here earlier, Dean. This is a kind of a similar scam where if you look closely here, this was an email I got from a servicer that does a bunch of registered agent fee services for like a Wyoming entity I own. So when you own a LLC, or even when you own just rental properties in your own name, you're gonna get hit up with a whole bunch of people via email, phone call, text, all kinds of things. And you've got to decipher and figure out if it's just people trolling you, trying to get you to sell your property, or they're trying to scam you into something. So this one was a little bit of this one stumped me when I first got it, because like Dean said, you got to be careful how they word things, right? And there's kind of it's kind of hard to see here, but they're kind of saying, well, there's a deadline, you got to pay up. Another thing that was kind of made me uncomfortable is they said, dear valued client. I think a lot of us who have a lot of online accounts know that typically we're addressed by our first and last name out of security reasons. It's the spoof emails that generically address you. I don't know. And the copy was just like, who uses capital letters in a professional email? They're saying, congratulations, your company's anniversary. It's time to pay your annual dues again. It's kind of messed up. But I eventually called around, and it was a legitimate invoice, but I didn't need to pay it. I'm going to get another person to be my registered agent for like a quarter of the price. But that was something that I just want to bring to people's attention.
Oh, so that's the registered agent, so that if someone serves you in that state, they can come and serve you. Yeah.
Right, and
Yeah.
my
Yeah.
understanding
Yeah.
for certain LLCs, you need to have a registered agent to
Right.
accept your
Yeah.
mail,
Yeah. 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 Yeah.
amongst many other things. People kind of drives me crazy. Like people go crazy over these LLCs, but they don't even take care of it, so it's not even worth the damn thing that you paid the lawyer to do. So
Yeah.
you guys have to learn how to upkeep and treat these LLCs like legitimate businesses, which include having a bank account, meeting notes,
Yep.
all the such
Yeah.
that.
If you don't, it's you're opening up yourself, because then the point is moot, because why did you create it? And then like you said, Lane, if not doing those things, just makes it easier for the plaintiff to break that corporate veil. Yeah, and that's the whole thing, is your protection that you're trying to create. And so to your point, you got to make sure you or someone is keeping that up for you. Yeah.
We talked about the Simple Passive Cashflow Banking. If you guys want to learn more about this tactic, go to simplepassivecashflow.com/banking. Free e-course there. Here's another flow chart that someone in my mastermind came up with. It's kind of answers the question, do I use a HELOC or do I use a cash out refinance? And this question usually comes up when people are finally investing in alternative assets. They blow through their liquidity in their bank account, which I never really have that much liquidity in my bank account, right? You don't want to have that much cash sitting around doing nothing. So you eventually blow through that, and then for most people, they've got a lot of money in their rental properties, their primary residence. You can get at that via HELOC and cash out refinance. In some cases, it might make sense for somebody to tap their retirement funds or their IRAs. But every situation is a little bit different. If you guys want to, join the group, book an onboarding call, we can kind of talk through these personal situations. But generally, if you're looking at getting the equity in your home, the answer is first, try and get a HELOC first, because it's usually no fees on that type of stuff, and it's sort of reversible. You can pay it back. Where the cash out refinances, you gotta pay fees for that, right? Don't get tricked by the lender who's saying, well, it's a no fee loan. That's nonsense. There's always fees in there. It's just they're just bumping up the rate to hide their fees.
They roll it in. They roll it into
Right.
the loan. Yeah.
Exactly. So what I normally ask people is, if you're going to be staying in your house for a while, right? Like, are you going to be moving? Is this kind of your forever home? Are you going to be here more than 4 to 6 years or greater? It probably will make more sense to get the cash out refinance in the near future. But try and tap the HELOC if you can, in the short time.
Yeah,
But
this is exactly my situation too. Yeah, so this is very good. Yeah, I mean, my HELOC is, the promotional rate has run out, and yeah, real similar situation where I'm trying to decide, do I refi, or and even the HELOC guys, I mean the banks, they say, oh, you can lock in a portion of the HELOC into like an amortizable rate. So there's all these options that you have to tap into that, as you'd call it, Lane, the lazy equity, right?
Yeah, but the lenders are always going to try and like kind of smooth you into like a loan where they can pick up their origination fees. So whatever they say, just throw out the window, right? They're the salesman. This is where you can build a community and talk to smart people who do this stuff. But I mean, yeah, you exhaust your HELOC first. What are you going to do? You're going to jump to another bank for another teaser rate?
Me.
Yeah.
Your
friend that we're talking about here, right?
Yeah, my friend's
about personal.
Yeah,
talking about personal stuff here. Just talk to business guys.
That's right. Yeah, my friend's probably gonna just go to another bank and get another right now the promotional rates are unreal for these HELOCs. Yeah, like under 3% for like for 4-year locked in at the promotional rate. Yeah.
And if you guys want to get the cheat sheet, go to arialoha.com/HELOC. And there it is. It's all in a Google Doc for you guys. You guys can go hammer on that type of stuff.
That's a powerful slide right there.
Yeah, but it's so go to arialoha.com/HELOC, and I think you can download that. If you guys can update me on the numbers, feel free to shoot me an email. You guys care to update the rest of the group on that type of stuff. So yeah, rolling into some of the top headlines, jobless claims reach fresh pandemic era low of 348,000. So unemployment is coming down. That's a good sign. The 2020 census just came out. So some of you guys are like me, and you kind of are a bit lazy investors, and you don't get, all attentive when little things come through, like 20,000 Afghan immigrants isn't going to change the real estate market, guys. Chill out. You invest off these big macro trends, right? Like population growth. So go check out the 2020 census. That's where it's all at. Here are, 5 of the states we talk about a lot, because a lot of influx movement and outflux of people out of California. But the story here is, Texas, Florida, Georgia, Washington have low double-digit growth, and the story is the minorities are increasing. In fact, the places where in California, white alone, I'm just reading it out aloud here, is -8% out of California. Interesting, huh?
That's very interesting, huh?
Makes sense though, right?
Yeah.
America's just a hodgepodge of different cultures. That's what we are.
Yeah.
Monthly report, so continuing on the monthly report, This came from J.P. Morgan, the job tracker of overall the trend is very strong. It's been 4 months since we've had the disappointing 269K report, which is kind of unemployment. The report in early September is close to a million. The Fed could easily make the argument that the goal of substantial further progress has been achieved, which has significance because once that has been achieved, they're saying that, well, maybe they'll stop quantitative easing. But I just don't see that happening, at least for another 6 months, probably another year, 2 or 3 or 4 or 5. Who knows, right? Best paying states for tech workers in 2021. The top 5 is Washington, California, DC. Where's number 4? Virginia,
Massachusetts.
Hawaii is kind of in there, number 24. But I'm not a computer science guy, so I'm not probably the best. But I would say if you got a computer science degree, the place to not start your career is Hawaii. But I do think a lot of people are moving to Hawaii who have already been established in their working career and experience, and are working remote.
Yep.
This is where the cap rates are currently. As you've seen over the last decade, they've been slowly coming down, and the interest rates is depicted in the darker blue line, which has been dancing up and down, but slowly going down along with the cap rates. And as investors, this is what it's all about to be an investor. You borrow your money at 1.45, you make 4.72. The difference is your returns as an investor. Time is the leverage factor that you forget, and that's why I don't care about all these little minutia things, because at the end of the day, investors, you make money on the delta times leverage on this slide right here.
Yep.
Another slide showing cap rates going down, and that's just people are starving for yield.
Yeah, margins are getting squeezed, baby.
Mm-hmm. Top 5 multifamily rental markets: Boise, Phoenix, Spokane, Tampa, Inland Empire. But as I started to read this, I kind of called BS on this because Boise is a very extremely small market. I don't even really consider it a tertiary market. It's less than a 250,000 population. Same thing with Spokane, Washington. Tampa's a little bit bigger, almost 400,000 population. I personally wouldn't invest in anything smaller than 500,000. Do you know what Kansas City is? You like to do that, or Vegas?
I mean, in terms of tertiary, I always consider it tertiary. Is that what you mean?
What's the what the population in Kansas City is?
No, I don't actually, but I can look it up while we're talking.
Really beat you to it. It's 486,000, probably 500,000. So exactly to my point. Kansas City is kind of a still smaller city.
Yeah.
But so Boise is way smaller. And I think this is where you see a lot of unsophisticated investors chasing these movers. This is no different than going after like a penny stock. No way.
Yeah.
Small and mid-sized metros with the best economic growth in 2021. So again, on that same thought process, the small metros, these are the places I wouldn't necessarily invest in, but these are the top 5: Spartanburg, South Carolina; Coeur d'Alene, Idaho; Sebastian, Vero Beach, Florida; Winchester, Virginia; Punta Gorda, Florida. And then stepping up to the more mid-sized metros. Now, these are the smallest areas that I would personally invest in. Huntsville, Alabama, which just overtook Birmingham, Alabama in the 2020 census for the largest city in Alabama.
Wow.
Northport, Sarasota, Florida; Port St. Lucie, Florida; Boise City, Idaho; and Provo, Utah.
It's weird that Boise popped out again, though.
Yeah. For mid-sized metros.
Yeah.
These are the large metros, and these are the ones that really are more substantial out to follow. So these are the top 5. Well, maybe we'll just read the whole list in this order: Nashville, Raleigh, Austin, Jacksonville, Orlando, Oklahoma City, Minneapolis, St. Paul, Tampa, Salt Lake City, Atlanta, Denver, and Las Vegas.
You just wanted to read Las Vegas. That's why you
I
wanted to
just,
read the whole list.
I know, just it barely cash flows though.
Yeah.
That market. Uh,
Yeah.
we talk a lot about the South, Midwest markets, but if you wanted to invest in the Western markets, which might be a good idea because they got beat up a lot, or California, they got beat up a lot. Now's the time might be to go in.
Yeah.
The top 10 were Boise, Phoenix, Las Vegas, Tucson, Colorado Springs, Reno, Albuquerque, Salt Lake City, and then Denver.
Denver still. That's
Yeah, we just went and checked out a property recently,
oh.
Denver. Quarter 2 2021 single family rental investment trends. Some of the key findings: occupancy rose to 95.3%, matching the highest level since 1994. Vacant to occupied rent growth accelerated to 12.7%, a record high, and cap rates dipped to 5.8% amidst rising asset valuations. So the takeaways that I had from these charts here, here on the left side, loan to value ratios. To me, what that's telling me is that we don't have debt going crazy and bonkers like how it was in 2005, 6, 7.
Right. To your point, yeah. So less risk of having a big debacle of a bunch of troubled loans and foreclosures and yeah.
Right. To counteract that, of course, I would also say that in the last year prices went up. So obviously, you would think loan to values to go down when that happens, but I think overall loan to values is pretty healthy. And then
Depends on the underwriters, right, for the new loans.
yeah, I mean it's still hard. I mean, a lot of my clients, they make good salaries, and it's hard for them to get a loan. I mean,
Yeah.
And this other chart on the right side, basically what we're looking at is the investor percent share of single family home purchases. So this is your mom and pop investors. So in 2000, they were at 3%, and it's slowly gone up to 2011, and it peaked at 8%. But after 2010, it's been on the decline slowly to almost all-time lows now. That what that's telling me is, if we see the big headlines like BlackRock
Right.
buying in and buying huge tracts, and you were around during this time, right?
Yeah.
Around 2000. I mean, people in the Facebook group, right? I don't know if you saw that post, right? People were kind of freaking out about that.
Yeah.
You and I were around in 2011 and 12, right? The same thing was happening, wasn't it? And it didn't do much, right?
Yep.
But that's what I think newer investors, they freak out on, like, oh my God, there's like 20,000 Afghan immigrants coming in. The housing stock is going to get, like, demand is going to go skyrocketing, right? Or like they're like, oh, a hurricane came through town, right? Or it doesn't matter, guys, right? Blackstone buys a gazillion rentals. It doesn't really move the needle too much.
Yeah. And actually, is that excluded from this? Because if the source is Fannie Freddie, I'm thinking those are conforming loans. I don't know. Do they take into account the hedge funds picking up? They go like how you said back in 2010, 2011, where they're just picking up a whole bunch of single families that were foreclosed. I don't know if they have access to that information, right, for Fannie.
Well, I think good point. I don't know for a fact, but I think that, like, Fannie Mae has insights into a lot of data, and I think that this is all encompassing of the market as opposed to just what Fannie Mae or Freddie Mac came through their doors.
Mm-hmm.
So here are the interest rates that Freddie Mac are putting in. We had a little spike in April of 21, but then we're kind of now at the all-time lows once again.
Cheap money, baby.
Yeah. Ending with a few fun things. Maybe we'll see a Taco Bell like this in 10 years, but on the mainland, they're kind of trying out these double-decker drive-through lanes. Jack in a Box is on the rise with 64 new restaurants. And
Wow.
some other news: OnlyFans is now prohibiting any sexual explicit conduct. So Studies show that if you watch porn, you're 4 times more susceptible to the scams Dean we're talking about.
Oh.
No, that's a joke. But probably, I mean, you're probably gonna get more viruses, right? You go to those shady websites.
Yeah,
But
yeah.
I just bring this up too because the people investing for cash flow in like workforce housing, people like housing for regular people. That's 20,000 people, 20 million people, no, 200 million people in this country that you could be going after as your potential client. I've never been a big fan of investing in short-term rentals because it's such a discretionary item, or military towns, college rentals. I mean, yeah, you can make hay when things are good, but one little thing, one little government intervention, you're screwed.
Yep.
If you guys want to get access to my free remote rental e-course, shoot me an email, lane@simplepassivecashflow.com with the subject line LITP. And there's no questions. Let us know next time. Any suggestions, questions, and topics. And we will see you guys next time. Unless, Dean, you got any closing remarks?
Just keep an open mind. I love chatting with you, Lane, too, informally or formally. Your mindset always helps me to realize I got think differently. Don't be a lemmings and follow everyone. And so I just want to reemphasize that because you always gotta keep an open mind in things and try to learn. So I just want to emphasize that.
Yeah, and you want Dean to give you an evaluation on your house? Go over there and sell. If that's best time to do it, or if you want to buy too. But we'll see you guys next time. Bye.
Hey, see you guys. Bye.
Free real estate investing group, check out reialoha.com.
We're just two local guys with so much to say. So listen to the real estate brothers today.